morning, the Commission Chief Executive, NUPRC Management, distinguished participants. Welcome to the 2025 Nigerian Licensing Round webinar, hosted by the Nigerian Upstream Petroleum Regulatory Commission. My name is Halima Yusuf Sada, and I will be your anchor for today's session. This webinar is part of NUPRC's commitment to providing regulation as a service, reducing execution certainty, enhancing transparency, and positioning Nigeria as a competitive destination for upstream investment. Today's engagement is designed to provide investment clarity and execution certainty for companies interested in participating in the 2025 licensing round, which offers 50 oil and gas blocks across frontier, offshore, shallow water, and deep water terrains. This is a live virtual session. Participants are encouraged to stay muted, submit questions during the presentation, and remain engaged throughout the program. Our keynote address today will be delivered by a leader at the center of Nigeria's upstream transformation. Under her leadership, NUPRC is advancing a regulatory approach defined by clarity, predictability, and execution certainty, qualities that investors value and markets respond to. Ladies and gentlemen, join me in welcoming the Commission Chief Executive of the Nigerian Upstream Petroleum Regulatory Commission, Mrs. Oritsemeyiwa Eyesan, to deliver the keynote address.
Distinguished participants, esteemed investors, industry leaders joining us from across the world, ladies and gentlemen, good morning and thank you all for logging in. On behalf of the Nigerian Upstream Petroleum Regulatory Commission, I extend a formal welcome to all participants attending this webinar on Nigerian's 2025 licensing round. Although we are convening virtually rather than in person, the significance of today's proceedings remains substantial. While this webinar is focused on the 2025 licensing round, the purpose is far broader. It signals Nigerians' deliberate effort to reposition its upstream sector for serious business. Long-term investment. It is also an open invitation to partnership, to transparency, and to shared responsibility as we work together to shape the next phase of Nigeria's upstream oil and gas industry. Distinguished participants, on the global landscape, energy security and supply resilience are central economic and geopolitical priorities, while investment capital is increasingly selective and disciplined. Our national priority is therefore clear and unambiguous: to attract capital, grow reserves, improve production in a responsible and sustainable manner. To therefore achieve this objective, a structured, transparent licensing round is essential. Nigeria is ready to be the beautiful bride to capital and playroom for advanced technology towards recovering our hydrocarbons. The Nigerian Upstream Petroleum Regulatory Commission is therefore mandated by law to conduct licensing rounds in a periodic, transparent, open, and fully competitive manner. In furtherance of this, the 2025 licensing round, the entire process will be guided strictly by published rules. our guidelines, model contracts, bid parameters, and evaluation criteria will be clearly defined, publicly available, and fully enforceable. So as to investors, you are not navigating uncertainty. You are operating within a framework that is transparent, predictable, and deliberately designed to inspire confidence. In this round, 50 oil and gas blocks across Nigeria are available, allowing investors to access the country's key basins and create long-term value. So as we move through today's session, I want you to view this round not just as an offering of acreage, but as an opportunity to participate in a stable, rules-based system that is opening the door to genuine value creation. Distinguished participants, the licensing round is an open call for committed partners, those ready to invest, bring technology, and accelerate Nigerians' assets from license award to exploration, appraisal, and ultimately full production. The process follows 5 steps: registration, pre-qualification, data acquisition, technical bid submission, evaluation and commercial bid conference. Only candidates with high technical and financial credentials, professionalism, and credible plans move forward. Winners are chosen through a transparent, merit-based process. With the approval of His Excellency, President Bola Ahmed Tinubu, GCFR, signature bonuses for the 2025 bid round are now set within a value range that reduces entry barriers and places greater weight on what truly matters: the technical capabilities, credible work program, financial strength, and ability to deliver production within the shortest possible time. This has been done to increase competitiveness and a response to capital mobility. Let me restate clearly that the bid process will comply with the PIA 2021, promote the use of digital tools for smooth data access, and remain open to public and international and institutional scrutiny through partners like NI90 and other oversight agencies. Indeed, transparency is an integral part of our process. Since December 1st, 2025, all licensing materials have been posted on the Commission's portal. Dedicated support channels created to enable prompt response to inquiries from applicants, and the bid process, the pre-bid conference provided opportunity to clarify the requirements and promote a transparent, well-informed participation process. To further strengthen the process, today's webinar, the first of its kind, aims to clarify bid requirements, help you participate effectively before the tender deadline as well. We also invite your questions and feedback to improve the licensing round process and outcomes. In closing, let me emphasize that the Nigerian 2025 licensing round, it's not merely a bidding exercise. It is a clear signal of a reimagined upstream sector, anchored on the rule of law, driven by data, aligned with global investment realities, and focused on long-term value creation. Thank you for your attention, and I look forward to your very, very active participation during this webinar.
Thank you, ma'am, for that clear and insightful address. Your remarks have set a strong foundation for today's discussion and clearly outlined the Commission's expectations and commitment to investors. During the presentation, please type in your questions in the comment section. Don't forget to type in your name and company's name as well. We will have experts respond to them shortly. We will now move into the technical segment of the program to provide a step-by-step overview of the licensing round process, including timelines, bid submission requirements, and evaluation criteria. I invite Dr. Amber Ndoma-Egba. Dr. Amber is the Deputy Director, Lease Administration, Exploration and Acreage Management Department of the Nigerian Upstream Petroleum Regulatory Commission. Dr. Amber?
Thank you, Halima. This presentation will focus on an overview of the licensing round process. We'll take you through the licensing round objectives, geological locations where these blocks are located. We'll discuss the blocks on offer. We'll categorize the blocks and we'll explain the data sources. We'll also explain the applicable fees in the licensing round process. Then we'll take you through the bidding process and the requirements. Then we'll conclude this presentation by the scope of this bid round and what the license will entail. The licensing round objectives. One of the objectives of the licensing round is energy sufficiency. It will support long-term global needs, create jobs, and enhance Nigerian content. It would also grow oil and gas reserves, will help in gas utilization, and expand opportunities even in the midstream sector. The objectives of the licensing round also will attract foreign investment. The licensing round maps. We have 7 sedimentary basins in Nigeria. We have the Sokoto Basin, the Chad Basin, we have the Benue Trough, the Bida Basin, Anambra Basin, Benin Basin, and of course, the mature Niger Delta Basin. This licensing round will take place across 5 of the 7 sedimentary basins. That's across the Chad Basin, the Benue Trough, the Anambra Basin, the Benin Basin, and of course, the Niger Delta Basin. In the present licensing round, the Sokoto Basin and the Bida Basin, there will be no blocks on offer. the geological locations and terrains, in the Niger Delta, we have 35 blocks. In onshore, you have 16. Shallow water, you have 18. And deep offshore, 1. That makes 35 blocks on offer in the Niger Delta. In the Benin Basin, we have 3 blocks on offer, which is onshore. In the Anambra Basin, you have 4 onshore. In the Bennett Trough, 4 onshore. And in the Chad Basin, you have also 4 blocks onshore. So in the Niger Delta, of the 16 blocks, we have PPL 2A to 29 to PPL 2A59 in the onshore. Then for shallow water, it goes across PPL 2A31 to PPL 2A60 in shallow water. Then the deep water, you have PPL 2010. In the Benin, we have 3 blocks, PPL 307 through 309. Anambra have PPL at 900 through 903. In Chad, you have 700 to 703. And in the Bennett Trough, we have 800 to 803. These are the blocks. Then the categorization and data sources. In this bid round, we have categorized the blocks into 2. Blocks with detailed or limited data and blocks with no data at all. Blocks with detailed or limited data, of course, you go to the NDR, the National Data Repository, where we have 2D seismic, we have well reports, we have analog well data from nearby wells. Then the TGS, we have information on the 3D and mega survey information. We have the TGS, the petrol data for even the deep offshore and all that, for you to have access to those information for blocks that have data. The applicable fees for this bid round. The registration and pre-qualification is $10,000. After the registration and pre-qualification, data prying and data leasing will come next. Data prying is $10,000 per block, and data prying is not compulsory. But data leasing is compulsory, and the data will be leased per block where there's available data. The list of all blocks and the availability of data will be made available at the submission of the application. The application fee per block is $25,000. The bidding process, there are 5 stages in this bid process. The first one is the registration and pre-qualification. After registration and pre-qualification, of course, is the data access and purchase. Like I said earlier, you have the data leasing, you have the data prying. Data prying is optional. Data leasing is compulsory for the block of interest. And take note that you are required to submit not for none more than 2 blocks. Then after that is the technical bid submission. The technical bid will be submitted a block. After the technical bid submission, then there will be evaluation of the technical submission. After the evaluation of the technical submission, successful applicants will be invited for a transparent commercial bid conference where the winning bids or the winning bid as will be announced in an open, transparent process. The pre-qualification requirements. We have 3 buckets in the pre-qualification requirements. You have the technical and operational, you have the financial and the corporate. In the technical and operational, we are to look at the experience you have in geology, in petroleum engineering, drilling and completions, reservoir management, then HSC, environmental sustainability, and decarbonization objectives. We'll equally look at your experience in petroleum economics and the understanding of the fiscal provisions in the PIA and the input that will lead to the determination of your profit indicators, MPV, profit to investment ratio, and all that. Then the second bucket is the financial. We'll look at your financial capability, the minimum turnover, the cash in bank, and the bank parent company guarantee. The minimum turnover for onshore and shallow water is $40 million. For deep water, what will be required is $100 million. The same with the cash in bank. And of course, if you are a new company, we can look at the parent company guarantee and make sure that, okay, that is also part of your financial, capability in that regard. Then we look at the corporate and legal, that your company is incorporated under the Company and Allied Matters Act, and you also have good standing. Note that a foreign company can equally apply. However, before the award is given, that company must register. So we have the technical bid requirements. At the submission of the technical bids, we evaluate the technical bid based on the following criteria. We look at your understanding of the block that you are to bid for. In the subsurface evaluation, we look at your submission of your exploration work program, that is the initial exploratory period. For onshore is 3 years, for deep water is 5 years, and for frontier is 5 years. We look at what are you going to do within that initial exploratory period that have been given to you. Then we look at your development and production concept. How are you going to drill development wells? How are you going to your completion philosophy? We want to look at your evacuation and your facilities. How are you going to build and evacuate these things in this block that has been given to you? Then, of course, sustainability and environment, the decarbonization objectives, and the host community development. Are you going to develop the host community? And are you going to produce this in a sustainable manner in line with international best practices? Then your project economics and the fiscals. Do you have a firm understanding of the fiscal provisions in the PIA and how you run the economics in regards to the NPV, the profit to investment ratio, and all those parameters that leads to robust economic evaluation? And we'll look at that in scoring your technical competence. Lastly, of course, the life cycle planning, the abandonment considerations. How are you going to treat the abandonment, in this regard within the life cycle of the block? Here we talk about after the technical evaluation, and the successful applicants will be invited for the commercial bid conference. At the commercial bid conference, there are key parameters that we are going to use in the evaluation of the commercial bid. One is the signature bonus. Like our CC said in her speech, the signature bonus is within the range. We have a range which is between $3 million to $7 million. and you'll be evaluated based on your submission. Of course, a higher weighting will be for 7 million and a lower weighting for 3 million. Then the second parameter is the work program commitment. The work program commitment has to do with the initial work program and also your commitment for the development and the drilling of the development wells in the submission of your technical evaluation. The next one is the performance guarantee. Pursuant to Section 78, subsection 16 of the Petroleum Industry Act 2021, the Commission has the prerogative to determine the percentage of the bond that will be given in respect of the work program commitment. And further to that, the Commission Chief Executive, in the spirit of enablement, in the spirit of support for investment, has approved that the minimum work performance security should be 1%. However, that will not preclude the posting of a work security more than 1% if you want to have a higher weighting in regard to your score. But the minimum, of course, is 1% as a result of the work program that you submit in this regard. Then the winning bid will be determined now on the weighted score of the technical and the commercial score. That is where the winning bidder, of course, the highest applicant that scored the highest will now emerge as the winning bidder. In conclusion of this presentation, the scope of the PPL that will be awarded will be one, the PPL is, you have the exclusive right to drill exploration and appraisal wells. You have non-exclusive right to carry out petroleum exploration operations. What that means is, in that PPL, another company could equally be given a petroleum exploratory license across the PPL. Then you have right to test and dispose of the test crude in that PPL. You have a right to submit a field development plan for the approval of the Commission, which will further lead to the conversion of your PPL to a PML. And that PML will enable you to win, carry away, and produce crude from that block that have been awarded. Thank you.
Thank you, Dr. Amber, for that comprehensive overview and for clearly walking us through the process. To take us through the licensing terms and the model contract applicable to the 2025 licensing round, I invite Mr. Augustine Okwa. Mr. Augustine Okwa is the head Alternative Dispute Resolution Center, NUPRC.
Thank you, Alima. I'm going to be taking us through the licensing terms and modern contracts. The licensing term and modern contracts will cover notable provisions of the guidelines. Then I will speak to the factors that could lead to your disqualification even after you have been pre-qualified at the pre-qualification stage. Then we'll run through the bid guarantee that is required to accompany your bid submission after the pre-qualification stage. I will look quickly through the license that will be granted to you upon being emerging as the successful winning bidder. I will look at the contract terms and model, contract model that would underpin the license that will be awarded in this licensing round. And finally, we'll run through some regulatory and compliance issues that all bidders need to be very conversant with. So, on who is eligible to participate in the bid process, my colleague, Dr. Egba, had spoken to the fact that an applicant could either be an individual registered company or a consortium member. And then equally, a foreign company can apply in the bid process. But because the Petroleum Industry Act prescribes that licenses and leases can only be granted to a registered entity in Nigeria under PAMA, the foreign company would then be required to register a Nigerian entity before the license would be awarded in the name of the Nigerian entity. But importantly, a company can bid as a consortium. If you then choose to bid as a consortium, that means a group of 2 or 3 or more companies coming together to bid. You must then furnish us your consortium agreement that speaks to the fact that this company have accepted to bid in this bid process as a consortium. When you then opt to bid as a consortium, you must appoint somebody as the operator in the event you win the bid. The operator must have a minimum of 30% equity participation in the consortium. Also, after companies have been pre-qualified as individual companies, if you then choose that you want to then form a consortium, 2 or 3 of you can come together and apply to the commission before your bid submission that you want to then submit as a consortium and no longer as an individual pre-qualified company. Of course, the commission will not unreasonably withhold such approval. Upon your being qualified, the factors I'm going to be running through are factors that could lead to a pre-qualified applicant to be disqualified. First, where an applicant has misrepresented facts to the commission in your bid submission. In other words, you have submitted false information or you submitted forged documents, even up to an award stage. If the commission discovers this, you will be disqualified. Please note, the commission shall employ all mechanisms to verify information you submit to us and the document you submit to us. Again, if a company has been awarded previously a license or lease, and then our record shows that you have not developed the assets in a vigorous business manner, even if you have been pre-qualified in this process, you will be disqualified. Also, if you are indebted to the federal government, if you have not paid your, as a license holder or a leaseholder who is participating in this exercise, if you have not paid all your statutory fees to the federal government, inclusive of your concession rents, royalties, you will be disqualified. Also, if you have unpaid taxes, you will be disqualified. And again, if the company is insolvent, you will be disqualified. And importantly, if the company or a director or shareholder in the company has been found by a court of competent jurisdiction to have committed offenses that impinges on your personality and the financial capability of the company, you'll be disqualified. We've had cases whereby promoters of companies have been found guilty by court of competent jurisdiction of being corrupt. Such an applicant will be disqualified on the basis of that court determination. When you have, my colleague spoke to pre-qualification, said after the pre-qualification, then you would then submit your bid for those who have been pre-qualified. When you are submitting your technical and commercial bid, your bid submission must be accompanied by a bid guarantee. and the bid guarantee value shall be 5% of the proposed signature bonus. The signature bonus ranges from 3 million to 7 million. The choice of how much you want to bid as a signature bonus is yours to make. But whatever choice you have made, you then will be required to submit 5% of the proposed signature bonus as your bid guarantee. The bid guarantee you'll be submitting to the commission for this bid exercise will have a validity period of 120 days after the commercial bid. You recall my colleague did mention that the commercial bid will take place in an open commercial bid conference. After that bid conference and the winning bidder has emerged, both the winning bidder and the reserve bidder, the bid guarantee you have submitted to us will have a validity period of 120 days. However, the bid guarantee will continue to be valid until the issuance or award of the license to you. So if the issuance of the award exceeds 120 days, such winning bidder will be required to extend the validity of that bid guarantee. Note that bid guarantee will only be submitted and will be acceptable from only international banks that have BBB rating or Nigerian banks with BBB rating. We will not, as a commission, entertain bid submission from insurance company. Where a bid is not accompanied with the requisite bid guarantee, that bid will be rejected. Upon the emergence of a winning bidder at the commercial bid conference, the winning bidder will be issued an offer letter. The offer letter will stipulate the condition precedent the winning bidder needs to fulfill before the issuance of the license by the minister. So the condition precedents will include payment of the signature bonus within 60 days from the issuance of the offer letter. And equally, it will include your work commitment guarantee. You will recall that in your bid submission, applicants will have submitted their work commitment obligation, and then you are required to submit, and that work commitment you have made will form part of what you are required to fulfill. And then you are required to submit a performance bond that will guarantee that work obligation. And of course, you are required equally to show evidence of payment of your rent of the first 1 year. Note, if the winning bidder is unable to fulfill this condition precedent within these 90 days, upon the expiration of the 90 days, without recourse to the winning bidder, the commission will then invite the reserve bidder to fulfill these conditions. And it means the offer made to the winning bidder lapses. One of the things we expect prospective bidders to note is that there are contractual arrangements that underpin this bid process, and what, of course, the license package will entail. For this bid process, you either operate on a concession contract arrangement or a production sharing contract arrangement. Significantly, if you operate on a concession contract arrangement, it means the government has a right to back into that asset at any time during the lifespan of the asset up to 60%. And that 60% will be held by NNPC on behalf of the government. Why, if it opt to bid under a production sharing contract, NNPC will be the concessionaire. In other words, the license will be issued to NNPC, and what will be given to you is the contractual rights, and then you'll be governed by the production sharing agreement. So applicants will be required at the bid submission stage to state clearly whether you will be bidding under a concession contract or a PSC arrangement. An evaluation will be based on your choice of the contract. When you have fulfilled the condition precedents that I had mentioned earlier within those 90 days, the commission will then make recommendation to the minister for the grant of the license to you. The license that will be granted to you, the package will entail the license instrument itself, the general license condition. The general license condition speaks to the general terms and conditions of the license that you are required to adhere to during the pendency of the license. And of course, if you are bidded as under a concession or a PSC, a copy of the executed PSC or concession contract will be annexed to the package. And the work commitment you have made during your bid and the performance security. And then there will be a description of the area of the license in accordance with what has been prescribed under the law. This slide, which is my last slide, speaks to significant regulatory compliance matter and enforcement framework that bidders need to take cognizance of. As a bidder, either as a company, as a shareholder, as a promoter, you are eligible to bid for a maximum of 2 blocks. If you bid for any blocks exceeding these 2 blocks, those additional submissions will not be evaluated. It will be deemed that you never submitted them ab initio. Recall, submission is going to be by electronic submission, so we can determine real time which of those blocks you are bidded for, which of the bid submission comes first. So once we tick the 2, others will not be evaluated. Again, I did mention earlier on that if you're a consortium, you must nominate your operator, and the operator has to have a minimum of 30% participating interest in the consortium. As a consortium, you can choose and elect to change a member of your consortium, post the award. Before the commercial bid declaration that will happen during the commercial bid process, if you opt to change a member of a consortium, you must write to the commission to seek approval. But when you decide to change your consortium member after the award, then you then have to go through the assignment procedure as prescribed under the Act. Again, the PIA has prescribed that the minister has power to do what we call partial revocation. We've had instances where members of consortium under a joint operating agreement, a member might decide to frustrate the effort of others towards quickly developing the assets. Where this happens, the member who has failed to fulfill his obligations, participatory interest, will be revoked as prescribed under Section 99 of the Petroleum Industry Act. And that revoked participatory interest will be distributed amongst the other non-defaulting members. Again, if there is change of control, if there is change of control in the participating interest of an asset holder, it will require ministerial consent. And finally, awardees enjoy to note that your work commitments that you have made under your submission will be enforced by the commission. Thank you.
Thank you, Mr. Augustine, for that clarity on the contractual framework guiding this bid round. Please be reminded to type in your questions in the comment section. Don't forget to type in your name and your organizations. We will have experts respond to them. Next, to explain the fiscal and taxation regime applicable to the 2025 licensing round. So the 2025 blocks, please welcome Mr. Anyete Okon. Mr. Anyete is the Deputy Director, Economic Value Administration, NUPRC.
Thank you, Olimo. Building on the enabling rules Mr. Austin just outlined, my section covers the fiscal terms applicable to the blocks on offer in the bid round. I'll provide an overview of the legal basis, the fiscal obligations as contained in the legal instruments,
and the policy initiatives and tax breaks that the president has graciously granted to support investment and sustain production in the upstream petroleum sector. The fiscal terms are anchored on two principal laws. You have the PIA 2021 and the Nigerian Tax Act 2025. These two laws are strongly supported by the provisions of the executive orders aforementioned to ensure a rule-based and predictable framework in terms of fiscal arrangement in the upstream petroleum ecosystem. The applicable fiscal obligations are grouped into four main categories. You have the usual royalties, which the entitlements of the state to the production as a resource owner. You have the taxes, you have the subsidy fees, and also the right of the state to participate in the cost of development of these assets. The royalties are made up of the oil royalties, please go back, oil royalties and the gas royalties. While the oil royalties are paid based on production on a sliding scale framework and varying across the terrains, the gas royalties, on the other hand, are paid based on sale volumes. And for obvious reasons, the domestic supply attracts a lower rate so that companies will be incentivized to supply us with the needed gas for energy needs when compared to export sales, despite of the foreign exchange that will be earned from the export sales. The subsidy fees include the signature bonus, which every winning bidder will have to pay prior to the award of a license in this block. It also includes the commission premium that is payable to grant a mining lease from the license, the right to win and produce oil and gas. There's also a renewal bonus payable prior to the lease that was granted earlier to be renewed after 20 years period. The statutory fees also consist of the applicable fees that are paid for activities conducted in the assets. You may observe that I started with royalties and the fees, but let me go back to the taxation, which are principally made of the royalty tax, which is the uncommon tax, and the company income tax. The uncommon tax is ring-fenced to net revenues from the sale of crude oil and field condensate, while the company income tax are the general net revenues generated by the companies for the sale of total hydrocarbons under the licenses. And you may also recall that as my colleague Austin outlined, the state also reserved the right to participate in the development operations. So that is also the fiscal obligation available to the state. It's worthy to highlight the gracious intervention made by the president in terms of fiscal incentives to support strongly the development of our greenfield non-associated gas to meet our energy needs, to trigger investment in deepwater projects, and also to reward efficient operators that have demonstrated cost efficiency and savings as validated by the Commission on an annual basis. The fiscal frameworks and the incentives, as outlined, are designed to promote investment, support sustainable production, and ensure a fair and increasing returns to every licensee, every lessee, every capital provider, as well as states. But I want to also point out to the bidders
that the devil and actually the salvation are in the details. Please ensure that you internalize the fiscal instruments, participate actively in the bill round, and harness the opportunities that have been put on the table as being handled by the Commission to create wealth for your entity, for your capital providers, and for the state, and for the growth of our country. Thank you so much. Over to you, Alima.
Thank you. Thank you, Mr. Okon, for the breakdown. Next up, I'll be calling on Mr. Eyang for the presentation takeaway. Mr. Eyang will also be anchoring the Q&A, moderating the Q&A session. Mr. Eyang is a director in the NUPRC. Sir?
So far, 3 presentations have been made. The first presentation highlights the overview of the bidding process for the 2025. The second presentation touched on the licensing times and model contracts, while the third presentation touched on the fiscal terms. Putting all these presentations together, these are our takeaways. First, the 2005 bid round is organized in compliance with the PIA. Secondly, we have achieved stability in our regulatory environments, thanks to PIA, thanks to regulations, and thanks to our guidelines. This has increased investors' confidence. In fact, we've started seeing the results. We've seen the increase in exploration activities as well as the increase in development activities. A total of 50 blocks are offered in this round. These blocks cut across 5 sedimentary basins: Chad Basin, Benue Trough, Anambra Basin, Benin Basin, and the popular Niger Delta. On the process of preparing for the bid round, we've had several engagement with the stakeholders, and we've had a lot of feedbacks. And those feedbacks have enabled us to have a robust bidding process. Also, we've been having a lot of discussion with the stakeholders, and the recurrent issue is integrity and the transparency of the process. Therefore, NUPRC has come up with measures to address those concerns. First, we've drafted a guidelines, and that guidelines is a document that helps the investors to navigate through the process. The guideline is robust, it's clear, and it's also concise. We've realized that communication is very key. Therefore, we've evolved 3 communication channels. The first is the portal. All the information relating to the bid round is posted on the portal. Second, we have a dedicated phone line where a dedicated staff is assigned to take care of investors' queries. And lastly, we also have a dedicated email address where investors can send in their inquiries, and we have a dedicated staff to attend to those queries. To create a level playing field, we have made available the criteria, that is the pre-qualification criteria, and the technical criteria to be available to all the investors. You will know that our portal is hosted by a third party. And for us to ensure the integrity and the security of that portal, we had to audit, technical audit and security audit of that portal. And that process will be carried out during the bid round exercise, as well as at the end of the exercise. And lastly, during the commercial bid round, which is the last stage of the exercise, it is a machine, it's a digital tool that will be used for the evaluation, and it will be done at the presence of all the audience. The schedule is, we are currently on the item 2.3. This information is made available to the applicants in their portal. Thank you.
Thank you very much, Mr. Yang. Please watch these explainer videos. Our experts will be answering your questions shortly. Thank you.
About jobs, advancing technology, and delivering values to investors, host communities, and Nigeria's economy. The future where exploration respects the land and sustainability guides every decision, where ESG is not just a checkbox, but a commitment. This is the bid round that rebuilds confidence, a fair, open, and competitive process for partners who believe in Nigeria. Because Sparrow is lifted. Discover more at br2025.nuprc.gov.ng. Your journey starts here.
Round portal. The registration and expression of interest process is the first step in this licensing round. It is simple and can be completed by following these steps. Step 1. Visit the official portal at br2025.nuprc.gov.ng. Then click on Get Started to register or log in. Select Create Now. Fill in your details. Submit the form. Endeavor to read and accept the terms and conditions with the confidentiality agreement before registering on the portal. An activation email will be sent to you. Please activate your account within 72 hours. Step 2. Payment for confirmation. Step 4. Once your payment is confirmed, you will be granted access to upload your expression of interest documents according to the stated requirements. For full details, download and review the licensing guidelines and pre-qualification criteria available. This page contains company information, shareholders information, directors information, management team, beneficial ownership information, technical and operational evaluation, and financial and commercial considerations. Ensure all sections are completed. Then click Finish Profile to submit your documents. Kindly review all information before finalizing. Step 6. Await the outcome of the pre-qualification phase. Successful applicants will be notified. We encourage you to review all details provided in the licensing package section. For inquiries, email br2025@nuprc.gov.ng. Phone +234 913 901 1133. NUPRC, enabling simplified licensing round processes.
Thank you for watching the explainer videos. We will now move into the Q&A session, that will be moderated by Mr. Yang with a panel of experts. Mr. Yang, please keep your questions coming. Type them in the comment section and don't forget to type in your name and organization as well. Mr. Yang.
In this Q&A session, I will be joined by Fumi Adesoya, NUPRC. So joining us online is Emeka Nkema Kalum. Mr. Emeka is the division head, Energy and Power, Fidelity Bank. Joining us online also is Emily Kay. Emily is senior geoscientist with the TGS. Joining us is Ahmad Dulai. Also, we have Dr. Amber Egba. Anita Okon, please join us. And Hassan Adija. Okay, the first question will go to Mr. Emeka. What are the primary bankability considerations that prospective borrowers need to be aware of?
Good morning. I can barely hear the moderator. I don't know. My speaker volume is high.
Okay, can you hear me now?
Okay.
Mr. Emeka, can you hear me now?
Yeah, I think they're very, very well now.
Okay, thank you. So my question to you is, what are the primary bankability considerations that prospective borrowers need to be aware of?
Okay, so thank you. Good morning. I can hear myself, so it appears that the echo is still there. I don't know.
Please go ahead.
Is it good to continue?
Yes, go ahead.
Okay, so thank you again for the opportunity. I look after the oil and gas business in Fidelity Bank. And for us in Fidelity Bank, we've been very active in supporting both indigenous operators in the space and marginal field producers. While we have focused on marginal field producers that are in production, we also help some others who are close to production. So in the course of that, we've learned a lot in terms of typical considerations for a viable project and what we look out for when we want to finance a customer. So typically, these customers, before they come to us, they've done some subsurface studies and also their development concept readiness, basically. So how do they want to develop the field? How do they want to evacuate the produced crude? Which other facilities are close to them that when they commence production, they can easily evacuate through them or they can tie in. You know, marginal field economics is very, very tight. So you typically want to have your development program in phases so that your race to first oil will be quicker. So we look at the subsurface quality and these concepts, you know, using independent consultants. So in the course of the last 10 years, we have developed a retinue of independent consultants that we work with that have experience both locally and internationally. So we use these consultants to do technical due diligence. They help us to look at the reserve assessment and also the planned work program and how they want to develop these assets. We also look at the, at the time we're looking at them, they are likely not to be in production. So cash flow projection is very, very key. However, that cash flow projection will have to be very, very robust. And we have noticed something of recent. People like to use the highest range of pricing to build their cash flow. It's not typically a very good way to go. In our experience working with the IOCs, they use a very, very conservative pricing model, such that even if oil price goes down, the economics will still be robust. Some IOCs take a global corporate level hedge. Some of our marginal field players, at the point they are starting, they can't even afford hedge. So the cash flow is very, very important. It must be very, very resilient. We also look at the regulatory and contractual clarity. The fiscal terms and the license totals and the local content compliance is very, very key. But beyond all this, in our experience, JV governance structure has always been the critical part. People come together, 4 or 5 of them, and own something that is given to them by the government. But sometimes they struggle to work together. So you see that most of the people that have become successful from the 2020 marginal field round that we have supported are single source awardees. What do I mean? Where one person is holding the license, the individual or the company commits its resources and its destiny into that license, and they usually, see it to fruition. And when you have multiple partners, you expect that multiple partners will contribute, and it will be less a burden on each partner, and then they will all develop together. But sometimes the conflicts and the issues around cash call that come with it can be very, very stressful. Also, sponsor strength built from that, JV governance structure. There are some sponsors that, put significant equity in the business. When you have a company that is asking you as a bank to come and support them, and when you look at what they've done, the company has spent over $70 million of their money in the marginal field, or $100 million of their money in the marginal field. You feel very, very, even if they're not in production, you feel very, very committed to, come in and take them through the last mile to ensure that they start production. So that we look out for. We typically don't like people go to NUPRC, collect, pay signature bonus, collect marginal field license, and the next day you see them going to the bank to go and look for loan. You are very, very far from banking loan. The owners of that business and the equity sponsors that have gone to collect that asset, that is the time they have to put their skin in the game. Because what every bank wants to look at is how much more of your sponsor's money have you put in this structure or in this JV for the bank to now finance you. So it's very, very important that I would like everyone to, pay attention to that. There are some companies that have capacity; they don't have to go to bank to do anything. But some companies also may have to, tap the banks. But it's important that you, as sponsors, put in your cash first to prove that you are committed to this, project. Also, the structure of financing is also very, very important. Most people that you see come into marginal field program, they already have existing businesses. I try to encourage people to, keep their existing businesses separate from the marginal field venture. Because typical of the, contracts that run in the oil and gas industry, they are all JV risk-based, contracts. So because you may want to bring in partners into that marginal field program, partners that you may not want to bring into your original business. So always run your marginal field license and awards through joint venture structures. The essence is that, the banks that are financing you can easily extract, collateral and security from that marginal field without impacting on your existing business. Also, the cash flows are ring-fenced and the coverage ratios will not affect your existing business as well. Then when you take insurance, the insurance also ring-fences the, project cash flows as well. So bankability structure is very, very important. In our experience, we have seen that direct funding is good, but there are also a lot of other structures that we have come to experience working with our customers that also work. Vendor financing is good. Crude oil share arrangement is also very good. We have a group of vendors that operate drilling rigs and EPF and storage facilities that we can typically assemble together. They provide vendor finance solution to awardees that will enable them carry the awardees to first oil. Then the banks can then come in and discount that account payables with minimal cost. And then they can now go forward into their next phases from there. So there are different structures. These are things that people that are in this space have to sit down, and look at banks that can support them. Fidelity Bank we have had over 50 years. I've started echoing again, yeah. Supporting the marginal free space. So, and we've done it repeatedly across the different companies that are in different phases, both the ones that are producing, the ones that are not producing, the ones that are near production, and the ones that are shut in, post-production. So, because their issues and problems are different, but you need a bank that, understands the typical, funding challenges and structures of a marginal field, awardee for you to, work together. So thank you. Can you hear me? I hope I've not been speaking to myself.
The second question comes to you. TGS has been in Nigeria for a while. Please, can you take us through your experience in Nigeria with respect to the data availability, Nigerian data in TGS portfolio, and perhaps, the quality of this data that within your portfolio? Thank you.
Okay, yes. Good morning, everyone. I'm Luke from TGS. And yeah, so TGS has the most extensive data library in Nigeria compared to any of the other seismic competitors out there. We have a regionally extensive mega survey combined of post-stack legacy time data, which covers over 76,000 square kilometers of the Niger Delta and also extends onshore. We have Mega Survey 2D as well. And we have some more deepwater surveys that we have reprocessed, some of them into depth. We have new acquisition in the Awele survey, which is covered by PPL 2010. And we also have a reprocessed 2D dataset in the deepwater. And so the majority of the blocks in this lessons round are in the shallow water and the onshore. So these are mostly covered by our Mega Survey 3D, which is good regional coverage and good to be able to see an area around the particular PPL and to assess the extent of the trap and the play outside of the individual block. Thank you. Back over to you.
To obtain financing. That is for Mr. Maker, please.
Yeah, sorry, I couldn't hear you a bit. The last I heard was
Mr. Maker, can you hear me now?
Yeah, I can hear you now.
Okay, so the second question to you is, what type of security packages would banks typically demand from prospective bidders who may be seeking for financing?
Okay, so just from the presentations that we've had earlier, you can see that there are different stages. Okay, so at the B stage, of course, a typical bidder will require things like big guarantee. Then also when they eventually succeed, the performance bond side, I heard the presenter say that they will not accept insurance bond. So that means you can only take a bank bond on the back of BB rated institutions. So what that means is that the banks can also provide bid guarantees, and the banks can provide a performance bond to successful awardees. So typical of securities in this space, if someone wants a big guarantee, it depends on where they are on the platform. It depends on where they are on the platform. If they don't have existing cash flows, you would like to ask them, what kind of collateral are they providing? Most people that play in this space have, parent companies. So we typically rely on parent company guarantees. Of course, that parent company would have shown evidence of financial capability. Some companies have existing cash flows, so you may want to have assignment of cash flows. We've had customers that come to us and say, don't worry, just look at this $1 million, put it there, and give me a big guarantee. And I mean, we typically do all those. So some will also give you a cash sweep structure where they say, oh, from an existing cash flow, take $200,000 every month until you cover the big guarantee 100%. But give me a big guarantee now, $1 million, and we'll do that. So it all depends on the company structure, their positioning, and where they are in terms of credit assessments. So post-bid, if they eventually win, that's when the real conversations will start happening around financing the assets. So we typically take comfort in the reserves. We note that most of the people that will get, some of these awards, the documents that will be given to them, or the reports that will be given to them, will be classifying the resources as contingent resources, depending on their proximity to evacuation infrastructure and development of the field where it is. We don't typically take contingent resources as security. So the awardees have to work on the assets to ensure that the asset gets reclassified as reserves for us to take them as representative of security. Otherwise, we typically rely on things like share charge, assignment of off-take receivables from existing, businesses, and also insurance assignments. But beyond all this security, like we usually say in the banking industry, we don't finance projects because of collateral. We finance projects because of the companies or the project's ability to repay the loan over time. So the conversations are always very, very dynamic and open, so that customers can follow us when we are doing these appraisals. It's not a case of giving them a list of security items. but it's a consultative engagement process. We also try to look at, production milestones that will give them that they can meet. Because sometimes they may not be ready to access the financing, but you can tell them the things they will achieve that will enable you release cash to them or finance them. So based on those kind of structures, they can go and look for private equity funding and also develop that asset to that stage. And when they get to that stage, they can now activate bank drawdown. So I hope I've done justice to this. Thank you.
Our audience will be interested to know the process of assessing data, possibly because of various suits.
Yes, so if you want to learn more about what data is available and how you can access this, then you can contact TGS either through the NUPRC portal or through the TGS Nigeria webpage. And I also have an email address which I can link somewhere in the chat or the Q&A. Yeah, so you get in touch and our account managers will get back to you. We can arrange data viewings for the areas that you're interested in, and they can guide you through the process. I can't really comment at the moment on the cost of the data packages, but as I say, if you get in touch with TGS, we'll be able to give you all that information. Thank you.
We'll be taking a question that is coming in from the audience. So the first question, Pumi, this question will be for you. This question is from Mr. Mahdi. The question is, are there critical compliant items that commonly lead to disqualification at the oil block pre-qualification stage that bidders should pay particular attention to? Also, will proof of funding be required at the bid submission stage for oil blocks or only post-award due diligence?
Thank you, Mr. Eyang. Regulations 14 and the guidelines, I think on regulations 11 or 12, sets out the actions that would disqualify an applicant. I will just focus on a few because there are quite a number, but the major disqualification, what would disqualify you would include things like, let me take that again. Where bidders directly or indirectly try to circumvent the process, they will be disqualified. Where there's material misrepresentation at any stage, they will be disqualified. Where we find that you have been guilty of an offense that affect your integrity, professional integrity, or your ability to fund the assets, you will be disqualified. Where we find that the applicant is indebted to government or has not vigorously developed an asset that has been granted, we will disqualify. We'll also disqualify where we find that the applicant, its shareholder or related entity has breached the terms of an existing contract, existing license with the government. Now, I think the second question, sir, was on the proof of financial capacity and at what stage they'll be required to show that. Like my colleagues have mentioned at the presentation stage, there's a pre-qualification stage. And at that stage, we'll be looking to ensure that you have the financial capacity to develop the assets. We've also already mentioned the the different financial um, thresholds that are required to prove that you can fund the assets on offer. But proof of this would be by providing, financial statements, bank guarantees, and we must also stress that we will be scrutinizing it, like my colleague had mentioned. So where we find that there's misrepresentation, those funds, the applicants or the bidder will be disqualified at any stage. And I think it's also important to note that the bid guarantee is required to secure the payment of the signature bonus. So where we give you an offer and you don't you don't make good on your signature bonus promise, the bid guarantee will your bid will be we'll call on the bid guarantee. Then finally, the work performance security is another financial component, and this will be required at the signing stage. So, but to answer the major question, the pre-qualification stage is where the evidence of financial capacity will be required. Thank you.
Okay, so there are general questions. The first question is, can we have a link to the recording after the webinar? The second question is, are we getting the slides? And the third question is, will all this information be made available by email links for review? So I think this answer was earlier answered during our pre-bid conference in Lagos. This information, I believe, will be made available to all the interested audience. So this question goes to Hassan. The question is, the access to the data, will it be physical only, or will it be also with the virtual?
Okay, I think to answer this question, we have to understand the different categories of data. You have the well data, and we have seismic data, and of course we have the multi-client data. So the data available in the NDR, for data available, it varies from asset to asset. If an asset has if like an asset like a follow field has data on it, it's mandatory. If there is seismic coverage that is not covered by the multi-clients, it's mandatory. The data prying is not mandatory. So the data prying, you would, as specified in the guideline, you can send your up to six representatives to come and have a look at the data. That is not mandatory. It's just for you to have an idea. We have 50 blocks. Maybe you would want to have a deep dive before you commit your resources, so you can come and pry the data. And it's $10,000 per asset. And then when you make up your mind, the data availability varies from asset to asset. So where data is available, you would pay for the data leasing fees. And just like we had in the past, how we've done in the past, you would have provided your dedicated channel, secure channel, where that data will be transmitted to. So data prying is not mandatory. You can request for it. And of course, once we pass the qualification phase, which is the registration phase we're in now, which is in 30 days time, those that are successful, you would have access to all the available arrays of data that are available, so that you can make your choice. And if there are any clarifications based on cost, the NDR and the multi-clients are on standby to provide that. Thank you.
This question is from Zen, and the question is application fee $25,000 per block?
To answer this question, the application fee per block is $25,000. You are required to apply for not more than 2 blocks. What that means is that if you are interested in applying for, for up to 2 blocks, you can apply. You want to apply for one, you can. And each application is $25,000 per block. So separate applications.
Okay, so this question is from Lydian, and the question is, there's a document required as specified document as regulatory compliance. Can we please be clarified as to what specific documents are required here, as regulatory compliance is rather wide? For me, don't know whether you understand.
Lillian, I would assume you're speaking to paragraph 12 of the guidelines, which sets out the legal pre-qualification criteria. What that clause is looking to ensure is that applicants are comply with regulatory requirements. Now, to ensure this, we have listed documents that would be proof of this. So, for example, compliance with returns at the seed standing. To ensure that we have your beneficial owners, we require that you fill your beneficial ownership form. So the requirements or the parameters for ensuring regulatory compliance, or what we'll be looking at, has been set out in the guidelines. Please review it. Thank you.
Okay, so this question is from Olarin Waju. The question is the bid per block, or one can have 2 blocks in one bid? To bid for 2 blocks, can there be in a single submission and then attract the $25,000 application fee? Dr.
To answer this question, like this question is similar to the previous one that was just answered. Every block has its own application fee per block, and you cannot submit for 2 blocks with single $25,000. So what you do is that since you want to apply for 2 blocks, each block would carry $25,000 submitted separately.
So Abdullah, this question is for you. The question is data purchase mandatory? Also, can I get or can I buy a data from the third party?
All right. Thank you, sir. I'm going to start with the last part, right? It is a crime, right? Going by the NDR regulation for anybody, any entity to access data illegally. It is a crime in Nigeria. So you cannot purchase data, not only for this purpose, for whatever purpose you intend to do through the black market. Let me qualify it. So it's not allowed at all for you. Then data purchase is mandatory as long as we have the data. Mr. Hassan and Emily K have explained the access modalities by which you are going to access data. So it is mandatory for one to access data through the 2 sources of data that have been emphasized here, right from the presentation by Dr. Egbar and Mr. Hassan. Thank you.
So that's all the question we have so far, right? Okay. So there's a question from Abdullahi, or for Abdullahi. The intent to enforce the work commitment included in the bid is understood. However, it should be noted that the work commitment in a bid is premised on the available data. However, post-award, if that data acquired informs the need for a change in the development plan, can this be accommodated? What is the process to follow?
Okay, I'm going to start looking at the first part of the comments that the person made. Yeah, we have two categories of blocks. We have the ones that have data or limited data, and then we have the ones that maybe don't have data. The expectation for the ones that don't have data is for you to put up a work program, right, that will now reflect the fact that you understood you're bidding for a block that doesn't have data, and the expectation is for you to now see the way and manner you're going to acquire data that will enhance, right, your development of that. That's one. Then on the other part, by time, of course, development concepts are based on evaluation that you must have carried. That's the expectation. But again, after submission of or award of the block, and you are able to access more data, or again, you looked deep into whatever data you have acquired, and there is need for you again, maybe again, to change the development concept. Yes, there are modalities or avenues for you to do that. You come back to the commission, submit a proposal or an application that we're going to jointly look together for us to see, backing it with informed decision. That is the way and manner you have acquired your data, that's through the NDR, or you have acquired the data again, which might be part of your obligation. You acquire new data that now maybe make you to understand the subsurface better, and there is maybe need for you to either reduce the number of wells or increase the number of wells you must have proposed. You come back to the commission with you are going to jointly review that. If there's merit for us to jointly again agree to change the development concept, why not? Yeah, there is modality for that. Thank you.
Okay, there's a question on the contractual terms, the difference between the PSC and concessional arrangement for me.
Thank you, sir. As you all will know, Section 85 sets out the forms of contracts, petroleum contracts that can be entered into. For these guidelines, we have I don't want to use the word limited, but just set out concession and the PSC. Now, the difference lies basically in the nature of interest and the funding mechanism. I would explain that. The nature of interest for the concession, the interest in the asset is granted to the winning bidder. So he owns an interest in the asset, while in the concession, the PSC, because the PIA says that NNPC would hold the interest on behalf of the government, the NNPC would be the concessionaire in this. And don't forget that the PSC is a type of service contract. Then for the concession, there's the PIA also says that there will be government will have a right to backing for up to 60%. Now, because of the nature of interest, I don't want to say that. The difference in funding, the funding mechanism, the difference in the funding is that one, because the concession owns the interest, the concessionaire owns the interest in the asset, he looks for his funds and he funds by himself. While in the PSC, the PSC contractor is the one that funds subject to a recovery arrangement as set out in the PIA and in the PSC contract. Thank you.
Okay, so the next question from ICAM. With respect to data leasing, experience from the previous licensing round with multi-client providers indicated pricing of about $500,000 for a block. This seems quite unreasonable at the bidding stage. This would greatly complement the NDR, even if some NDR data is made mandatory and more affordable. Kindly consider this in the context of risk-reward metrics at the bidding stage, which is quite early in the development cycle. This more or less seems like a comment, so we want to react to that.
Okay, thank you, Mr. Ikam. We need to understand the fact that different blocks will have different type of data. And if we go down to look at seismic, basically seismic determines the cost of data. The size of a block will determine the quantum of the seismic you have. And if you have a block, that is big, one should expect that, and you have a seismic data that covers the entire of that block, one should expect the fact that the cost of assessing data for that block would differ from a block that is smaller or they have less seismic. So cost of data determines, right, what kind of data you have in a block and the quantum of seismic that you have on that block. And again, I understood from the point of view of the questioner, because during the last bid round, we have what we call the multi-beam, which is like a 20,000 square kilometer data that was on offer. I believe that must have informed why this person asked. Again, as Umar Hassan said, the NDR and the multi-client that's with us in NUPRC, right, were available to continue to provide insights, right, and guidance on the cost of data. At this stage, we cannot talk about cost of data per block because it differs. Thank you.
Okay, so the next question is from Mr. Oluka Yode. The question is for Dr. Egba. Please, can I get a little bit more information on the non-exclusive exploration rights? Does that right cover seismic acquisition and drilling of exploration well? Does the concession owner have first right of refusal to be offered for the exploration data and well?
The answer to that question is the concession owner does not have the right of first refusal, you know, in the exploration in terms of seismic acquisition and all that, but it has exclusive right to drill exploratory well. However, yeah, there is a non-exclusivity in that right to own petroleum exploration license. That does not mean that he cannot get it or he cannot apply for it. So if you have a PPL, the commission can equally issue a PEL, you know, to another company to carry out acquisition, seismic, geophysical, and all that without drilling a well. So the drilling of a well is only limited to the owner of that license. But the acquisition of data to aid in, you know, de-risking the area is where the exclusivity is limited. So if you have a PPL, you can decide to even apply for a PL, but another person could equally get that PEL, essentially to carry out petroleum exploration across that license.
Okay. So this question from Zen again, and it goes to Anita Okun. Effective tax rate is 60%. NHT plus CIT plus royalty, which is biddable. Is this correct?
Thank you, Zane. You may recall that under the PIA and as codified in the Nigerian Tax Act, the company income tax is generally 30% for large companies, which I believe every E&P company will be. However, the income tax varies across the stage of a license. For the PPL, that where there's applicable revenues generated from sale of test production within the time frame of the production, the income tax is charged at a rate of 15% from the net crude oil revenues. But where there's a grant of a mining lease from that PPLs, the income tax is upgraded to 30%. You may also recall that this is applicable to only the onshore and shallow waters. In the PIA, the frontier and the deepwater were exempted from the income tax for obvious reasons to incentivize and encourage investment. Where the Nigerian Tax Act, as informed by the government, due to maybe economic relatives, are restored income tax on net crude oil revenues generated from the deepwater. So the frontier waters still remain exempt. The frontier areas still remain exempt from the income tax. So that brings the total tax effective rate from a range of 45, being the sum of the company income tax, generally at 30%, plus 15% of income tax for shallow onshore waters and deepwater, to 6%, as you recall, which is and that applies only when a mining release has been granted. So that means you have the right to win, produce, and make money. For royalties, please, I want to correct the impression. The royalty rates as applicable in the PIA cannot be bidded, cannot be biddable property. What the biddable property regarding the royalty interest is what every licensee wishes to provide as an upside to the state, to maybe inform the state that is in the position to cede some income interest to the state. So, like I earlier mentioned in my presentation, the devil and happily the salvation are in the details. Please internalize the PIA and the NTA so that you'll be well informed on your fiscal obligations. Thank you.
That's how far we can go with the Q&A. However, there's an opportunity for us answering additional further questions. So please, if you have questions, send it through our email. We would get answers across to you. Also, on the process of this interaction, we've been taking notes. All these informations and note and the comment and the advice will be taken to enrich our process. Thank you so much.
Wow. Thank you. Thank you to the panel for focused and high quality discussion. The clarity and the precision of the responses have significantly strengthened understanding and investor confidence in the 2025 licensing round. Other questions not answered will be answered on our licensing round portal. As we approach the end of today's session, I would like to call on Barrister Olayemi Adeboyejo. She's our Commission Secretary and Legal Advisor for the vote of thanks before we wrap up. Thank you.
Wow. That was really an impactful session. Thank you. Thank you, colleagues. Distinguished ladies and gentlemen, let me begin by appreciating the Commission Chief Executive, whose leadership continues to set the tone for how seriously we take this licensing round. And I must say the CC is not a front-down leader. She is very much hands-on. She attends every dry run. She reviews slides. She asks the tough questions, sometimes on a Saturday. She's always there. She exemplifies leadership by example, and I think the result shows in the quality of our output. I'm sure today we've all been quite blessed and by the level of output we've churned out. Thank you, ma'am. I would also like to thank distinguished speakers and panelists for their insightful contributions on technical, commercial, and legal considerations. And these, I believe, have added great depth and value to today's discussions. My appreciation also goes to the Bid Round Committee and the NUPRC technical teams. They have been critical to the successful planning and execution of this engagement. We are grateful for our financial sector contributors for sharing market perspectives on bankability and funding considerations, to our multi-client data providers for illuminating the data landscape, and to our industry information and media platforms, including Wood Mackenzie, for supporting awareness and outreach around this licensing round. Finally, my thanks goes to all participants for your engagement. We look forward to continued interaction as we progress towards the next milestones in the Nigeria 2025 licensing round. And no, we are not giving out 10K. We are not giving out any more to work on them. Thank you very much, participants, for joining us in this engagement. Thank you.
Thank you, CIT's commitment to transparency, investor engagement, and regulatory certainty. On behalf of the Nigerian Upstream Petroleum Regulatory Commission, thank you for joining us. We look forward to your participation in the 2025 licensing and have a great day ahead.